So good afternoon, everyone. I'm Tracy Wong. I am a crypto journalist, previously with CoinDesk and now freelancing. So I will be introducing our panel. And so this panel is called After the ETF, What Will It Take to Bring Wall Street on Chain? And what's amazing is that we actually have two representatives from companies that are Bitcoin ETF issuers. So it'll be super exciting to discuss. And so I'll actually have our panelists introduce themselves, actually. So maybe just briefly your name, the firm that you work for, and a little bit about kind of your role there. And maybe we'll start at the end there with you, Krishnan.
Perfect. So, yeah. Hi, I'm Krishnan Nair. I run VP of Product Management at 21Co.
Oh, maybe a little bit closer to the microphone. So
is this better?
Yeah.
All right, perfect. Krishnan Nair, I'm VP of Product Management at 21Co. What 21Co does is the parent company for 21 Shares, which is basically issuing ETPs, such like that we did, which is Bitcoin. 21Co oversees both TradFi and DeFi investment products, and I also am primarily focused on ensuring how do we get exposure for both ways to our user base and customers.
Awesome. My name's Ryan Rasmussen. I'm one of the senior analysts at Bitwise Asset Management. We are one of the crypto asset managers that issue the Bitcoin ETFs. We've been in the space since 2017, and we work to bring institutions into the crypto industry, financial advisors, RIAs, hedge funds, and all of that.
Hi, everyone. My name is Annabelle Huang. I'm a managing partner at Amber Group. We're also a crypto asset manager and market maker. Been around since 2018. We are headquartered in Singapore and Hong Kong, but we do service clients, institutional clients and high net worth individuals globally. So today, hopefully, I can bring a little bit more crypto native and Asian perspective to this topic.
Yeah, I guess I can go again. David Alderman, I work at Franklin Templeton, global asset manager, a research analyst on the digital assets team. And we're very involved both on the investment side and the building side, both like tokenization, venture, and liquid strategies.
Awesome. So before we get to on-chain stuff, I want to start talking about the Bitcoin ETF. So it's been about 6 weeks since ETF started trading. Certainly, the market has reacted positively. The vibes are good in Denver this year. And so maybe let's start with you, Ryan. Do you think, what has the reception been like? And did the ETF kind of outperform or underperform your expectations?
Yeah, the reception's been tremendous. It definitely outperformed our expectations at Bitwise. I mean, we obviously have been bullish on the space for a while and thought that the spot Bitcoin ETFs would be a huge unlock for institutional investors. But I think overwhelmingly breaking a bunch of records across the ETF ecosystem. ETFs have been around for 30 years, and 4 of the spot Bitcoin ETFs are in the top 25 of all time. So that just kind of shows where we're at in the broader scheme of the industry. And this week was a record for trading volume, and I think that momentum just brings more investors into the space. We're all over CNBC with the spot Bitcoin ETFs. That just means that more retail, more institutional investors are coming. So it's been really tremendous. It's been really exciting. There's a handful of different ETFs that are over $1 billion, and yeah, it's just very exciting.
David?
Yeah, I mean, I think it's exceeded expectations. Certainly the market's expectations. It's actually kind of impressive. I mean, this week has been insane. I don't think I've been to a conference in a while where it felt like this much energy.
Mm-hmm. I guess, Annabelle, do you have anything to add?
Well, I guess they touched on most parts, but I would say that from a servicing the more crypto native side of clients, we've been tracking or looking forward to the ETF launch, and this number, especially in the last 2 weeks, has definitely outperformed our expectation, and I think that brought definitely a lot more attention to the rest of the crypto market, in addition to Bitcoin, which is why we're seeing pretty incredible market run-up. And I think that's only going to continue as we head towards the rest of the year.
As in, look, we are excited. It's usually unprecedented to have almost $1 billion in year one. At 21 Shares, we've hit over $2 billion. So our total AUM is around 5 billion if you look at our global products. So we're just very excited about what's happened, and we look forward for more.
So it sounds like the consensus is the crypto industry overall, or everyone is very excited about the ETF. But I want to point out that the ETF, it kind of put crypto into this TradFi ETF wrapper instead of kind of the opposite, which is putting TradFi onto crypto rails. And so I'm curious, it seems like a lot of the demand was just people are now able to buy Bitcoin through their 401ks, through brokerage accounts in a ETF structure that has been around for decades. And I'm curious if you think that it's more of like a, do you think that that will continue to be the trend with potentially ETFs or more crypto going on to TradFi rails? Or do you think the Bitcoin ETF will likely just be kind of a gateway drug of sorts for Wall Street to get their feet wet into crypto? And why don't we start with Annabelle?
Sure, I think that's a great question, and I think, in my opinion, it's not either or. I think it probably happens in tandem. We've been trying to bridge DeFi and traditional finance for a long time, but a lot of the education we've done does not compare to the ETF announcement because it really legitimizes this industry. Bitcoin as an asset class, blockchain as underlying tech. So as we see more embracement in the traditional finance space towards crypto assets and blockchain, I think we'll also see more real-world assets on chain. We started with stablecoin, and now a lot of the Wall Street banks are already experimenting with it. And I think there are more types of assets that can be brought on chain as well. And I would say that we've already been servicing a lot of the traditional finance hedge funds that are very active within crypto as well. But as they have more venues to trade, I think they'll ramp up significantly as well. And hopefully we'll see more types of ETF or other types of structured products that come in, and overall will bring better price discovery, more liquidity in the market, and really legitimize this space much further.
Okay. David, curious to hear your thoughts on kind of, do you think there will be this, TradFi side of crypto and then crypto side, or do you think the worlds will somehow merge in a way?
I think, at least for the short term, I think there's going to remain kind of separated. I mean, it's just because, I think Wall Street, generally speaking, right now just has one product that's really, the Bitcoin ETF. And then, kind of like maybe structured products or something like that could really expand the horizon of like what they could do. But I think there's still, like if you look at where the market is today, like what tokens and what ecosystems are taking off, obviously Bitcoin is getting a lot of flows from the ETF, but there seems to be like where a lot of attention is within crypto native communities is kind of where everything else is going. But you're not seeing Wall Street go into that.
Okay. Ryan?
Yeah, I think that we're always going to coexist with traditional finance. It'll be the crypto world, the TradFi. ETFs are really just like the ERC20 wrapper of the traditional finance industry, and so we're bringing crypto assets into their world with ETFs. We're also seeing a lot of traditional finance products being wrapped in ERC20 tokens, like treasuries and private credit markets. And I think that as Wall Street slowly starts to see the addressable market of crypto, which is global and in some ways much larger than the institutional investor market, then they'll start bringing more and more of these structured products on chain. I mean, companies like Ondo Finance, Maple Finance are clearly seeing a lot of success right now with the tokenization of real world assets. I mean, it's one of the hottest trends in crypto right now. And so I just think that we'll continue to see both worlds dipping their toes in a variety of different ways, but net it grows the ecosystem, and I think they'll continually coexist for a very long time, and I think that's okay.
So, I mean, we have seen some of, you mentioned Ondo and Maple, but they haven't really taken off in the way that the Bitcoin ETF has really taken Wall Street by storm. I'm curious to hear your thoughts on what hurdles, it could be operational, regulatory, or just educational, getting Wall Street more educated about what's out there. What do you see as the major hurdles to bringing Wall Street on chain and how the industry can kind of overcome that? I guess we'll start with you, Ryan, and then we'll go to Krishnan.
Yeah, so I mean, traditional finance has so many compliance hurdles to do pretty much anything. Just getting these ETFs on platform is a huge process where many committees have to review the assets, choose which one they want to issue, educate their advisors, they have to educate clients, et cetera. So there's compliance hurdles, there's regulatory hurdles as well. I think that in a lot of places outside the US is where I think we're going to see adoption of these products. Maybe in countries where you can't just go into your brokerage account and buy a Vanguard treasury product. And so what's the better alternative? Creating a crypto wallet and going and investing in a Ondo Finance or Maple Finance treasury product. I think that's why we're seeing companies like Franklin Templeton bring products on chain, which is really awesome. And I guess my expectation is that as that market grows, it'll largely grow with retail consumers outside of the US first, and then institutions will see how they can grow their market that way, and then we'll start to see more and more products come on chain. But regulatory hurdles in the US in particular are definitely there for both issuers of these products and institutional investors in these products.
Look, our thesis is ETF and tokens are wrappers. Basically, ETF is where we are taking crypto and providing it as a traditional finance instrument. And the same way, we are looking at tokens as well, where you can take different types of things and move it back into DeFi. So really, the question comes down to is tokens going to be seen as a wrapper, or is it going to be seen as an asset? And once you get more understanding from a regulatory standpoint, not just US based, but also globally, that will help with the traction and will ensure that both the use cases fit for the users that we're going towards.
It does seem like some Wall Street firms are way more proactive in R&D and kind of experimenting with blockchain than others. So I'm curious, David, Franklin Templeton seems to be kind of, at least in terms of Wall Street firms, pretty proactive, while maybe some other firms, they've had their CEOs publicly come out and FUD crypto. Why do you think there is such a difference in the range of reaction towards crypto? And what will it take to get kind of the more cautious firms to kind of come around?
Yeah, I think, I don't even think it's necessarily something that's within TradFi. I think, you can talk to people that are not into crypto versus, crypto natives, and it seems to be pretty tribal. Like, there's a lot of people that just are not in the space, and all they see is just speculation, and really that speculation is just masking the core innovation of what's happening. So I think, at least for us specifically, from the top of the house, our CEO is extremely supportive, and she seems to really understand like where the innovation is, and she's willing to like weather storms. And other firms, they just haven't. I don't think they've just reached that point of understanding. All they see is kind of that masking of like speculation and 100x leverage, all that kind of stuff, and like it's in some sense it does. I think it kind of takes some time for most people to get a good understanding of the innovation and where it could go, But and I think the one thing actually that's really changing things is, for example, like the Bitcoin ETF. It's like completely changing the incentives on Wall Street, and so that's forcing people to learn, and so you're just going to have growth of people that don't understand it to people that understand it, and that's going to really help drive the space forward.
Mm-hmm. And I guess I'm curious, Annabelle, to hear, in Asia, a lot of your clients probably go to Amber Group because you guys are so crypto native and you've been in the space for a while, and whether you see kind of, if there were traditional financial firms that started their own crypto departments, whether you see that as kind of competition and kind of currently how interested in crypto are these firms?
Actually, I don't think it's quite a competition. A lot of times, because we have built the infrastructure over the years, so a lot of times we actually would white label our solution to them or work with them in some way where we're the liquidity provider to a lot of the traditional financial exchanges, whether it's banks building a new crypto exchange or offering their own custody type services to their clients. Because we've actually gone through many rounds with different regulatory bodies globally where we got involved in the very initial phase of when they are looking at the digital assets framework. So I think we are glad to be early, and we want to be able to help more financial institutions to be able to offer digital assets to more of their clients. And I think that is really our view of being the bridge between on-chain or DeFi to traditional finance. And what we love to see is more participants, more volume, more AUM, and that will really benefit whether it is the crypto native crowd or the more traditional finance crowd.
Let's move on to talking about where on-chain activity will go. So historically, so with the Bitcoin ETF, Wall Street got interested, but historically, Bitcoin isn't necessarily the most active blockchain in terms of, on-chain activity and smart contracts. And although it sounds like that Bitcoin is currently experiencing a bit of a renaissance in that area. And so when we were talking about bringing Wall Street on chain, it means, a unique custody solution and actually interacting with the blockchain rather than buying Bitcoin in the ETF wrapper. Where do you see this driving on-chain development? Do you think Bitcoin will see a continued renaissance, or do you think that a lot of the on-chain innovation will remain mostly in Ethereum and other alternative ecosystems? Maybe Ryan, we'll start with you.
Yeah, it's a good point. Bitcoin's certainly having a renaissance moment where you have Bitcoin L2s and BRC20s and NFTs. And I think 2 years ago at a conference like this, we would have said that's crazy, that will never happen. And I think that just points to the level of innovation that we see across the industry. I think institutions and Wall Street, for the most part, don't know what an L2 is, don't even understand a lot of what like NFTs are and DeFi is. So it will take some time, but they're most likely never going to land on an L1 because of the high fee structure. And if you're going to bring Wall Street on chain, you need to do it with low fees and high latency. And so I think that'll happen on L2s, whether that's Bitcoin L2s or Ethereum L2s or some other EVM chain that's low cost, high throughput. That's to be seen, but I think it will largely happen in the financialization of real world assets, whether that's real estate or treasuries or stable coins. Honestly, that's probably going to be the biggest spot where we see these firms and come into the space. But it could happen on Bitcoin L2s. I think that a lot of the institutional investors just need to first learn what Bitcoin and Ethereum are, and then they'll choose that path. But what we have seen is that this time around, we're not seeing a lot of institutions launch their own private blockchain, like enterprise blockchain. They are embracing public blockchain settlement layers, which is a big transition from before, and I think showing where we're headed in the future.
Mm-hmm.
If you look at Bitcoin, as in there's a lot of, so firstly, the inflows that have come in has helped Bitcoin go into price discovery. So that's good for Bitcoin as an ecosystem overall. But there have been layer 2s like Blockstack and Ordinals that is actually gaining a lot of traction as well. What it means is it can help crypto native community go deeper into the layer 2. But for us, is we can also look at a lot of innovational work that comes in there and push it back to TradFi as a wrapper, as an ETF. So it really depends on the direction that it goes.
Let's move on to the Ethereum ETF. So after BlackRock filed for a spot Ethereum ETF, it generated a lot of industry buzz that an Ethereum ETF, that we would see an approval by the end of this year. And so what are your thoughts or predictions on an ETH ETF? And we'll start with you, David, and go down the line.
Yeah, I mean, I'm going to be kind of limited in what I can say just because, we did file for an ETH ETF and it's undergoing SEC review, but, it's good to see the industry pressing forward.
Okay.
Well, I guess that's also what I guess me representing the crypto native community, we really also want to know that it's happening or when it's happening. And I think that the interesting point of this is that I think outside of the crypto native community, a lot of people probably equate crypto to Bitcoin. Maybe they're aware of Ethereum, but I think once the Ethereum ETF is launched, they'll realize there's more crypto assets available than just Bitcoin. And there's so many things that you can do on top of Ethereum, to a point earlier, versus maybe what's available at Bitcoin at the moment. I think that's going to be quite interesting. For example, there is the native staking play that could be possible after a ETH ETF. There could also be a staked ETH ETF, and that's done purely on chain, and you're not necessarily taking too much additional risk from that perspective. Obviously, restaking is another topic at the moment, and all the other things that you can do on chain once you get into the ETH ecosystem. So I think that's going to be even more interesting from introducing only Bitcoin at the moment.
Yeah, similar to David, I can't comment on any specific applications, but broadly speaking, if you look at where Ethereum is today, the market structure looks very similar to where Bitcoin market structure was ahead of the spot Bitcoin ETF approvals. We have CME futures for Ethereum. We have Ethereum futures ETFs approved in October. So the market structure looks very similar. From that perspective, I think that we could likely see spot Bitcoin ETFs. We also have some really strong advocates at the SEC. There's presidential candidates, Senate candidates at this conference, and so the industry is maturing. That's what needs to happen. We weren't ready for spot Bitcoin ETFs until recently is the reality, and markets really need to continue to mature to a place where they can be regulated in a manner that ETFs require. So I'm hopeful, but it's to be seen, and there's a big decision date coming up in May that we're all watching and all excited for.
What I can share is that we were the first to file with ARC as S1, but that's about it in terms of Ethereum ETF. Look, for us, it's about being regulated and ensuring that we provide such products to our US investors. What we did do is end of last year, we pushed out 2 Ethereum future products, and this just seems to be the natural step for us.
Mm-hmm. Okay, I think we have time for one more question. I want to ask about, we've seen that Wall Street, they move at a very different pace than the crypto industry moves at. And you all have kind of expressed relatively positive views that they will eventually come around to the crypto industry and be on chain. I'm curious to hear what that time frame looks like, and whether we will see that kind of in 1 to 2 years. It does seem like the ETH ETF might rapidly follow the Bitcoin ETF, but in terms of actually getting Wall Street on chain, what does the time frame look like? And maybe we'll start with you, David, and just end with you, Krishnan.
Yeah, I mean, Wall Street definitely operates on a different time frame than we do. So, or at least, well, at Franklin, I guess I work on the same time frame, but personally, I operate on a different one. So, I think Ryan's right. It's probably through the RWA kind of portal, just because it's a way to have products that are on chain. It's a way for those firms to also have incentives to push those products, and then you can start to see some sort of proliferation of, you could call it like permission DeFi or something like that. But in terms of timeline, I think that's really hard to estimate. It's really just, there's a lot of friction. There's a lot of friction to add utility to those products, and I don't know, 1 to 2 years. If we saw like Wall Street really active on chain, I would be kind of surprised, to be honest. But maybe I'm wrong.
Annabelle?
Yeah, I mean, I hope it is within 1 to 2 years, but I think that also might be a little bit too optimistic. Right now, we're seeing some early adopter financial institutions who have been looking at on-chain trading or other things, but a lot of them can't even do it directly because of compliance hurdles. So they would trade through a OTC desk like ourselves, and we would act as liquidity sourcing or provider for them. So actually, I do see that a lot of the hurdles might be on the regulatory clarity and the compliance side of things. I think the interest is there, especially after what we're seeing this year. But ultimately, I think Wall Street definitely needs a lot more clarity before they can move real size on-chain.
Got it. I guess very briefly, Ryan and Krishnan, will the institutions come this cycle?
I think they will come this cycle, but I think this cycle could be longer than ones we've seen in the past, just because we are maturing as an industry. So I would say 3 to 5 years would be great. Could be a little bit longer than that. Yeah.
Okay.
Yeah, I wish I could predict the time, but I think for the hope of the community, it should hopefully the cycle.
Okay. All right. Let's give a big round of applause for our panelists, and thank you so much for listening in.
Thank you, guys. Awesome panel.
Awesome, awesome. We are so back. The magical